All right, well, let's talk about turning a profit in the tech titan clash. AI is attracting billions of dollars in investments from big names like Microsoft and Google. Battle lines being drawn even as tech earnings are just around the corner. So let's take a closer look at how to position yourself in tech. Joining us now is Kenny Polcari, Kace Capital Advisors Managing Partner. Good to have you on the show here. So for people who are, they've seen what happened with bank earnings, which may not be as reflective as what we could expect for broader earnings. So how do you position yourself with tech right now before earnings?
So first of all, thank you for having me. Second of all, I think you have to be cautious broadly because I think the market's is still a little bit nervous and anxious. And so for me, I'm much more focused on mega tech, right? I'm kind of staying away from the fringe stuff. So I'm focused on Apple. I'm focused on IBM, Microsoft, Amazon, those kinds of names in the portfolio. And I think those names will do fine. Google, certainly there's going to be, there'll be another issue about that concerning kind of what's happened over the last couple of days concerning their search engine and all that. But the other big names I would kind of stay involved in. I would buy on weakness. I would be careful. When it comes to artificial intelligence, there's lots of opportunity. You reported it yourself, actually, about NVIDIA and the opportunity that they have. They just got upgraded. That stock's performed really remarkably well again this year and is up again today. I would look at other names like C3.ai, which is another artificial intelligence name that has come under some pressure of late just because there was a short story out there that I think is garbage. But one way or the other, I think there's an opportunity there. But I think you have to go in with your eyes open and figure out who you are and where you are on not only the life cycle scale, but on the risk scale.
Even as we're kind of taking a look at these names going into earnings season and just kind of waiting to see what type of tone they strike about the health of their consumer and pairing that with what we've heard from banks right now, what most notably would you be listening for to say that these companies have made it through or are heading towards the other side of the larger declines that they had seen over the course of 2022, and that this rebound that we've seen in early 2023 perhaps has a little bit more of a rally to it or a little bit more legs to it?
Well, it's interesting you say that because J.P. Morgan's Marko Kolanovic just came out this morning and said he thinks the tech rally is overdone. And he thinks, that we should see a pullback in tech because it has gotten ahead of itself, considering we're still unsure where the Fed is going. Because remember, if the Fed continues to raise rates, high tech names and high growth names will come under pressure. And those really include a lot of the tech names, which is why, once again, I say I'm concentrated just in the mega cap tech names because I think they'll weather the storm the best. But one way or the other, you can't compare tech earnings to like banking earnings because you just can't compare them, right? They're two different sets of earnings. And I think the banks, as we expected, came out strong, at least the money center banks. Maybe the regionals are going to have a little bit of a problem as we start to hear about them, considering, what happened with the Silicon Valley banking crisis. Now, from the tech side, I think you just have to be patient. And I think you have to stick to your plan. I think you have to know the names you own and why you own them and make sure that listen for on the earnings call and the forward guidance. Listen to what they say and make sure that the fundamental reason you own them or are looking to own them hasn't changed and it is still what you think it is. In any event, if it's a good quality name, even if it suffers some pullback, if it's a good quality name, it's coming bouncing right back. And I would view the pullback in any one of those names as an opportunity to add to my holdings and not panic and go, oh, my God, Apple's down 10%. I got to sell all my Apple stock. I'm going to lose everything. You're not going to lose everything. It's Apple. It's like anything else. It'll have ebbs and flows. But as long as the story remains the same and is fundamentally strong, then I think you're okay. But you have to listen to the guidance.
So then who wouldn't make the cut here, Kenny? Who are you steering clear of in the tech space?
Well, listen, I don't own any social media stuff, right? So Meta, that stuff, I never did. I don't own it. I don't want to own it. Now, you could say, if you own Google, you're kind of in the space, but not really in the space. But I stay away completely from social media. I concentrate in those big names that I just told you. I'm also starting to pick away at the AI stuff because I do think, considering everything that's happening over the last 3 or 4 months and everything we've heard, certainly in the upgrade with NVIDIA today, that AI is going to be a place that you want to be. But for me, the stuff I'm staying away from is just the social media stuff. I'm just not even interested.
Kenny, does tech lead the next bull run after a Fed pause or pivot?
Well, tech is certainly leading that bull run right now, right? You can see the Nasdaq's up almost 16% on the idea that the Fed is going to pivot. Now, here's the next thing. You have to decide whether or not you think the Fed is really going to pivot. I'm not in that camp. I don't see how they can raise up until May, then pause for a month and then start to cut. That makes zero sense to me. And so therefore, I'm not betting on that. What I am betting on is that the Fed is going to pause and then just hold rates where they are. If that's the case, then tech should do better. If we start to see the inflation data start to tick up again, forcing the Fed into another position to raise rates, tech is not going to like that, and investors are going to take money out of tech because they're going to run to take money out of the sector that has outperformed. Clearly, that's tech and a bunch of areas in tech. That'll immediately come under pressure. But if the Fed pauses, which I think that's what they're going to do, and hold rates steady, I think the cuts come in 2024, and then I would expect tech to continue to perform well.
Kenny, just lastly, while we have you, you were mentioning AI a moment ago. Is cybersecurity the most investable part of AI at this point?
Yes, I'm big in cybersecurity. I think you have to be CrowdStrike, Fortinet. You can even do it in the ETF CIBR. I think you have to have cybersecurity as part of your portfolio. Well, how much you weight it, once again, is going to be dependent on who you are. Younger people, your generation should be, in my mind, more overweight in cybersecurity. I'm at the end of the game here, right? I'm on the 17th hole, so I've got a lot less time than you. So while I'm in cybersecurity, I'm not going to weight it as much as you are. You have much more of an opportunity to take advantage of the time than I do.
Well, Kenny, one way or another,
yes.
I'll catch you at the 19th hole. How about that?
I can only hope.
Kenny Polcari, who is the Kace Capital Advisors Managing Partner. Thanks so much, Kenny. Appreciate the time.